Okay, so what happens when you let Saudi Arabia into the BRICS, given the other members? You have two of the three largest oil producers in the world, Russia and Saudi Arabia. You have two of the three largest nuclear arsenals in the world, Russia and China. You have, throwing India in, and some others, you have about 50% of global population, 54% of global GDP using purchasing power parity. Well, this is not the old third world. These are not basket cases. These are many of the biggest economies in the world that collectively have enormous power, natural resources, gold reserves, landmass, population, military. And again, I could go down the list, but this is a bloc that is as powerful in its own way by a lot of these metrics as the collective West, which I would call, US, Canada, Western Europe, Japan, Australia. Definitely. And the great thing about your audience is so smart. We don't have to go over every twist and turn of international monetary policy over the last 50 years. We could, but we're not going to do that. I think people know the outline. Yeah, it's really what's coming. That's the main event. So a couple of things. We should probably, without taking too much for granted, we should probably just define BRICS. It's an acronym: Brazil, Russia, India, China, South Africa. So those are the BRICS. And started in 2002 as a Goldman Sachs marketing gimmick. Jim O'Neill and some partners came up with it. And all they did, I'm not diminishing what they did, but they kind of took the leading economies, took out the G7 and Switzerland and a couple of obvious leaders, and said, well, who's left? That will be the up and comers, the fastest growing developing economies. Then they got Brazil, Russia, India, and China. That was kind of easy. And then a few years later, they added South Africa, which was a little bit of a favor to South Africa. South Africa is not anywhere near as large as those other economies or as important. However, it is one of the biggest economies in Africa. And if you're going to be the BRICS, you probably, you can't just be South America and Asia. You probably need to include an African country. So they picked South Africa. So that's how it evolved. So for a couple of years, it was a Goldman marketing brochure. And it's famous, heads of state and foreign ministers show up from all over the world, but they have what they call these bilateral meetings on the sidelines. And sometimes there are 3 or 4 say, hey, we're all here. Let's just grab a conference room and sit down and talk. Well, Brazil, Russia, India, and China, this was Dmitry Medvedev, who was the president at the time. Of course, Putin is president today. Hu Jintao, before Xi Jinping, and the prime minister of who actually was Lula da Silva at the end. He got arrested later, went to jail, got out, now he's back. And the prime minister of India. So they sat down and they said, we actually have a lot in common, a lot to talk about. And we added it up. We're a pretty powerful group. So they formalized it. And then in 2009, they had a summit conference, a formal summit conference with an agenda and all that in Yekaterinburg in Russia, in the Russian Federation. And for those who know the Russian history, that's the place where the Bolsheviks killed the Tsar and his ministers and the Romanov family. But I guess the Russians have a little bit of a sense of humor. But anyway, that's where they had this summit, and they solidified, okay, we're a group, we're going to work together, and they did. And over the coming years, they multiplied numerous subgroups. That people say it's the BRICS meeting coming up August 22nd. Well, yeah, that's the leaders summit. They have about 190 meetings a year. They have working groups on women's rights, sports, the environment, climate change. You could go on and on. It's a very active, what they call secretariat, which is central organization. A few years later, in 2014. They formed what they call the New Development Bank, NDB. Well, what's the New Development Bank? They, first of all, it's got 100 billion of capital, part paid in, part callable, but it also has borrowing power with that kind of ownership and that kind of capital on the balance sheet. They've got hundreds of billions of dollars of borrowing power. They could easily get a pretty good credit rating. And the purpose is to make loans for development projects to the member countries. And by the way, there are stockholders of the New Development Bank who are not BRICS, but they're kind of in the club. Well, what does that sound like? Multilateral.
The World Bank.
Well, it's the World Bank. That's exactly right. They copy the World Bank on their own terms with their own governance. Okay, the following year, they created something called the contingent reserve arrangement. Well, what's that? Again, they threw in a couple $100 billion from the members. China was the biggest contributor, again, with borrowing power. So take a couple $100 billion times 5 or 10, that's your power. And this institution was designed to be a swing lender to members who were running trade deficits, or facing a run on their currency, or facing the prospect of having to close the capital account. Exactly what we saw in 1997, 98, by the way. I was there for that one. We ended up with long-term capital. But, a pool that is a swing lender to countries with balance of payments deficit. What does that sound like? That's the IMF. That's the IMF. So basically, they copy the World Bank. They copied the IMF. And I want to make 2 points. Number one, it's not like the BRICS popped up 6 months ago and said, hey, we're going to have a new currency. You know, it's like Mickey Rooney and Judy Garland putting on a play. This has been in the works for 17 years. And it's typical Russian, Chinese. They kind of run a show, very methodical. So they duplicated the World Bank. They duplicated the IMF. Now they have applicants for membership, and there are, I think, 21 or more countries who have applied. Well, 7 have formally applied for membership. They filled out their college essay and they want to be members. And then another 13 or 14 on the waiting list, so to speak, and will perhaps eventually become members. But when you add those in, some of these will be admitted in August 22nd. That's the next big meeting, starting with Saudi Arabia. Okay, so what happens when you let Saudi Arabia into the BRICS, given the other members? You have 2 of the 3 largest oil producers in the world, Russia and Saudi Arabia. You have 2 of the 3 largest nuclear arsenals in the world, Russia and China. You have, throwing India in and some others, you have about 50% of global population, 54% of global GDP using purchasing power parity. That's, you can debate the method, but just if you do purchasing power parity, you get over half of GDP, 30% of the global landmass. I could go on and on. My point is that I learned development economics in the 1970s. We had something called the third world. It was Russia, or Soviet Union and the US. And then there was the third world. And all you knew about them was they were poor and, natural resources, gold reserves, landmass, population, military. And again, I could go down the list, but this is a block that is as powerful in its own way by a lot of these metrics as the collective West, which I would call, US, Canada, Western Europe, Japan, Australia, New Zealand, and a few others. So that's who this group is. Now there are a couple other groups that may join forces with the BRICS. There's something called the Eurasian Economic Union. Everyone's like, what the heck is that? Well, that's the EEU was Putin's answer. This has been around for a long time. This goes back to the early 2000s. This was Putin's answer to the EU. He said, well, you got the EU, we got the EEU. Now it's Russia and some Central Asian republics, Belarus and Tajikistan. I'm not saying this is France, Germany, and Italy, but it is a group that have reduced tariffs and improved trade between themselves. And there's another powerful group called the Shanghai Cooperation Organization, or the SCO, led by China. And these are mostly Central Asian republics, including Kyrgyzstan and Kazakhstan and some others. But they're all talking to each other. Now, what's the common denominator? Well, it's basically Russia and China. China's a member of 2. Russia is the only country in the world that's a member of all 3. So through pretty simple inference, you can say, hey, Russia and China are running the show, and it's very likely. Here are the applicants. It has another 20. Here's the SCO, a few more. Some of them are members of both. Here's the EEU, has a few more. Again, many are members of both. And you keep going, and all of a sudden, like a light bulb goes on. I said that is Halford Mackinder's global island, what he called the world island, and this goes back early 20th century. First, probably greatest geopolitical theorist in history. Got to read his book if you haven't read it. It's pretty short, but he had this idea of the world island. That is exactly what they're building. Now, why is that important other than the obvious, which is more collective economic and population power. By the way, output of wheat, pick your metric. This dominates the world. Well, for one thing, if you're going to have a currency union, the more countries you have, the more likely you are to be successful. So let's just kind of digress for a second. And what are the headlines saying? Again, you correctly said, haven't we been talking about this for 10 years? Well, yeah, actually we have. But in the past year, what are the headlines? China and Saudi Arabia are talking about selling oil for yuan. Brazil and China do large multi product currency deal where they accept each other's currency. UAE, China, same thing, selling oil for yuan. Russia, China, using yuan and rubles as payment methods for whatever they sell to each other. Russia sells natural resources, China sells semiconductors, manufactured goods, and so forth. And there are a number of those. I don't have to list them all, but there are 10 or 15 of these. The reason they've all fallen short, and very few of them have actually come to fruition despite the headlines, is when you have two countries and they're going to trade with each other and et cetera system. Well, when you have a multilateral, multi-country currency union, that problem goes away. Because now Russia sells oil to China. China pays in Brics, the Bric currency, pays you in Bric. But Russia can take the Bric and turn around to Argentina and say, we'd like to buy, or Brazil maybe, and we'd like to buy some Embraer aircraft. And Brazil gets the Bric currency, and they can turn around to China and say, we'd like to buy some Russ, who's brilliant. I read his stuff all the time. I'm like, man, you're so smart. And I just really follow him very, very closely and give him a lot of credit. But he came out a few days ago, maybe a week, and said he'd heard about this and he was kind of dismissing. He said, you can't have a currency union without a common fiscal policy. And I said, I don't want to mention his name, but I said, have you not heard of the euro? I mean, there is no common fiscal policy in Europe. Don't tell me that Italy has the same fiscal policy as the Netherlands, or that Germany has the same fiscal policy as Greece. They don't. They do have a central bank that issues the currency, has a little bit of gold, but not a lot relative to the size of the economy. But there's no common fiscal policy, and there's no common bond market. To this day, there's no such thing as a bond, I'll call it a euro bond, backed by the full faith and credit of the entire European monetary zone. It doesn't exist. You can buy German bonds in euros, you can buy Italian bonds in euros, but you can't buy a euro bond backed by all those countries. So they don't have a common bond market, and they don't have a common fiscal policy, but they do have a currency union that's very successful. So now back to the Brics, they finally have the scale. They finally solved this problem, which I described, which kind of is not, when you get two countries, you're not too much further ahead than barter, but with 30 countries or 40 countries, you've solved that problem. So that's the background. Again, I want to just at the risk of repetition, I want to make 2 points. One, it's been 17 years in the making. It's not an overnight thing. They've replicated the World Bank. They've replicated the IMF. Now they're coming out with a new currency. Now, here's where it gets really interesting. And I tell people, I said, if you want to understand this, and it took me a long time to figure this out. I mean, I was just like slaving over it. But I said, if you want to understand this, you have to stop thinking like an American. You have to start thinking like a Russian. This is the kind of thing that pretty much only Russia could come up with. So what is the Bric? And by the way, I don't know if they're going to call it a Bric. I'm saying Bric for convenience. It doesn't matter what they call it, but I just call it a Bric for the time being. But they'll come up with a name. Who knows? The value of the Bric is not determined with reference to any other currency. It's determined with reference to gold by weight of gold. Now, and I don't know the weight, they'll pick one, but again, it doesn't matter because it's not even, it's math, it's logic. And by the way, now we're back to Aristotle's transitive law. And this is the key. This unlocks the whole thing, because Aristotle said, if A equals B equals C, then A equals C. The B can drop out. It's not even arithmetic. It's logical. call it exchange rate, the dollar price of gold. So the LBMA, the COMEX, the London Metals Exchange, JP Morgan unallocated forward contracts, the whole huge gold market in dollars is still going to exist. In fact, the Brics want it to exist. And if I could just digress for 1 minute, Steph, I've never seen an international monetary economic problem with that has created more confusion. I won't say misinformation, that's a little trite, but just confusion or maybe deliberate hyperbole than this one. Because let me tell you what this is not. I'm going to tell you what it is, but it's important to know what it's not. This is not the petro yuan. This is not the petro ruble. This is not a gold-backed yuan. This is not a gold standard. This is not the end of the US dollar. It's not the end of the euro. It's not the end of the world. It's not any of those things, but that's what everyone's running around on websites or whatever shouting about. It's none of those things. In fact, quite the opposite. And this is where the Russian mentality comes in. The Brics want the dollar to be around. They want the dollar gold market to exist because they get the free ride. The dollar has to do all the dirty work in the gold space, and Brics get the free ride by declaring one brick equal to a weight of gold. Again, weight's the key. They just let the dollar gold market go wherever it goes, and the brick is worth an ounce or whatever, kilo, whatever. And yeah, the dollar equivalent under the transitive law changes, but they're not pegged to the dollar. They're not fighting that fight. So this, I analogize this. It's like you're in your house, in the backyard, your landscaper is like digging trenches and putting in plants and sweating and doing all this work. And you're sitting there with a glass of iced tea, enjoying the view. In other words, the Brics get to free ride on the dollar gold system. And they want that system. They don't want it to go away because they get the benefit of a gold value. Now think of what the Brics don't have to do in this scenario. They don't have to buy gold. They don't even have to own gold. They do, but no one in the world has enough gold to back a currency. This currency, the brick, will not be redeemable into gold. Now, maybe there's a dealer somewhere who will take it. That's between you and the dealer. But it's not like you're going to be able to march down to the People's Bank of China with a pile of bricks and say, give me the gold. They're not going to do it. So it's not redeemable. They're not going to make a market. They're not going to maintain a value because they don't have to, because it's by weight. They just get to sit back and piggyback on the dollar gold system and let the dollar do all the dirty work, with one twist. And here's the Russian contribution. So you don't have to close your capital account. You can close it, open it, whatever. You don't have to buy gold. You don't have to make a market. You don't even need that much gold. You just say, this is the ultimate fiat currency. The word fiat in Latin means I say so. Well, they say so, and there it is. And they put the United States, basically, Steph, this is a bet. This is a bet that the dollar is going to collapse. Dare I say, modern monetary theory, or friend Stephanie Kelton. I mean, all these ideas are ruining the dollar, and everyone can see it, but not yet. And so if you want to launch this new currency and you say, hey, long term, the dollar is going to collapse in terms of gold, I'll hook my horse to this own block. Who knows if others join? Probably will, but they don't have to. You need a big enough block. There is a critical mass, but I would say at this point, upwards of 30 to 40 countries and all the other things I mentioned. That's a big enough block. You're defining it by weight. So the market goes where the dollar gold market goes where it goes, but you don't really have to worry about it because you're anchored to weight. But here's the twist I like. So let's say, and this is how it's going to play out. Now you're the United States. You're like, looks like I've been painted into a corner. What can I do? Well, one of the things you could do, I've told the Treasury this for years, they don't listen. I mean, they invite me in, but they don't listen. One of the things you could do is buy gold. But what happens when the United States buys gold? The dollar price of gold goes up, and the brick gets stronger and the dollar gets weaker. Checkmate. In other words, the US is now in a box where you can't even get out of it by buying gold, because you're going to weaken your own currency relative to gold in the process, and the Brics are just going to sit there and not lift a finger. So it's genius. I got to credit the Russians. I'm not saying the Chinese couldn't think of something like this, but this has got Russia's fingerprints all over it. And getting back to something you mentioned earlier, Steph. Okay. People have been talking about this for 20 years, the Great Reset, the end of the dollar, the collapse of the dollar, gold to the moon, et cetera. And it's never played out. And the reason are some of the ones we mentioned, which is the dollar has these huge embedded advantages in the form of its reserve currency status, not because everyone loves the dollar or they even love the United States, but because we have the only bond market big enough to absorb global savings. The U.S. Treasury market is huge. It is liquid, but it's got a whole infrastructure. Primary dealers that bid at auction, when issue trading, settlement, clearance, futures hedging, options hedging, depository trust corporation, settlement, on and on and on. It's got this huge infrastructure of laws, rules, and regulations that they've been building for a long time. I would say 37 years since Alexander Hamilton. But above all, it has the rule of law that people just trust it. Don't have to like the dollar, don't have to like the United States, but you trust the market. The U.S., in response to the war in Ukraine, broke the trust. They froze the U.S. Treasury assets of the Central Bank of Russia. Unprecedented. And I'm a sanctions expert. I work for the intelligence community. It was part of what I did was, look at sanctions and CFIUS and a lot else. And as far as I'm concerned, and I know that our Brics friends agree, that's a default. Maybe S&P would call it a selective default, but Russia made the money. They bought the treasuries. They're entitled to principal and interest. And we're saying, no, you can't have the principal and interest. We're not paying you. Well, that's a default. I don't care how Janet Yellen wants to dress it up. And it was a shock, but worse than that, everyone else in the world was watching. Saudi Arabia, India, Brazil, Malaysia, and they're saying, and Turkey and others, and they're saying to themselves, gee, what if the United States doesn't like what I did? What if they don't like my policy? What if there's a war in my neighborhood and they're not in favor of it? Are they going to freeze my treasuries? Well, until a year ago, you would say, well, of course not. They would never do that. Well, they did in the case of Russia, and they will potentially in the case of these other countries. So that was the catalyst. The idea of getting out from under the dollar, yeah, it's been around a long time. The feasibility of that was limited, capped really by the absence of a bond market big enough to absorb global savings. But now the countries are saying, well, what good is it to have my savings in treasuries if you're just going to steal them? So I'm not saying Brics are wonderful all out of the gate, but at least it's not dollars. At least it's not maintained on a digital ledger at the U.S. Treasury, and at least you can't. I was sitting one seat away from a guy. He was a U.S. Treasury financial delegate to Asia, so kind of ambassador at large for the dollar. And his name was David Dollar, so it's kind of a nice twist. But so I said, and I always tell people, I'm in the Pentagon. I tell them what I'm telling you and your audience. I don't, it's the best analysis I have to offer, although we're a lot further along today. And I said, and this is back when the Iranian sanctions were a big deal. This is before Ukraine and before Russia. I said, this stuff works to an extent. It's not perfect, but it does work. And we did drive Iran to the bargaining table for the JCPOA in 2015. So I'm not saying it's completely ineffective. I said, but you guys are you're weaponizing the dollar. You're taking it too far, and you're going to get a backlash. How many times can you punch the punching bag before the punching bag gets up and walks out of the room? That's what you're facing. But I told him this, like I say, 7, 8 years ago. And David Dollar takes his hands, he takes both hands and slams them on the table, palm down, boom. And he goes, the US dollar has been the global reserve currency. It is the global reserve currency, and it will always be the global reserve currency. Exact quote. And I said, David, I feel like I'm in Whitehall in 1913 listening to John Bowles say sterling is the global reserve currency and it always will be, et cetera. I said, you're blind, but hubris is a good word. In plain English, taking it for granted. I mean, if you take your status for granted, then you can do all kinds of crazy stuff and not worry about it. But you can't take your status for granted. You have to earn it every day. We got the trust. We started with the trust, earned, like I say, since 1791, but we blew it. And I've always said, and I told government officials this, I said, I don't really think our adversaries can destroy the dollar. Mechanics of and hedging of a bond market big enough to be to absorb global savings. And the Treasury has that. And I said, China's not even close. China's not going to be global reserve currency for, I don't know, maybe never. They don't have any of those things. They don't have primary dealers. They don't have auctions. They don't have a large bond market. They don't have a rule of law. Neither does Russia. Who trusts the Russians? But then in thinking about the Brics currency, I had another one of these like aha moments, like where a light bulb goes on. I said, oh, I was writing or something, doing some research on World War One. Basically the history of government finance of war is what I was looking at. And I saw this Liberty bond poster, and it was, Lady Liberty, Statue of Liberty with a torch. And she, instead of the tablet, she had like a Liberty bond. And she was like, come on, America, we got to win the war, buy Liberty bonds. And in my book, The New Great Depression, which came out in 2021, was half the book was about the pandemic. Half was inflation, deflation, but the other half was the pandemic. And one of the issues that came up, because I said, well, it's kind of a new pandemic, why don't I read about the old one? And I read like 4 or 5 books on the Spanish flu of 1918. And one of the vignettes was they didn't know until 1930 what caused the Spanish flu. They didn't know what a virus was really until the electron microscope. But they had a sense that it spread around. And so in Philadelphia in 1917, there was going to be this big parade to buy Liberty bonds. It was like a freedom, win the war pep rally. And all these doctors at the University of Pennsylvania and elsewhere were like, don't do this. You're going to get 100,000 people on Broad Street, and they're all going to die of the Spanish flu, in effect. And they went ahead anyway. They did it because for 2 reasons. One, that's how important it was. But 2, there was more extreme censorship under Woodrow Wilson than there is today under Biden. I know that sounds like can't be true, but it was. They were arresting people. You couldn't write a newspaper article about the Spanish flu because it was considered bad for morale in terms of the war. And in fact, the reason it's called the Spanish flu is that Spain was not in World War I. They were not a belligerent. So their newspapers like, hey, we got this flu, and they were writing all about it. And the rest of the world's like, hey, I read the Spanish newspaper said they got a flu. So they called it the Spanish flu, even though Spain had nothing to do with it, but they were the only country that was allowed to talk about it. So, but what that did, if you look at the history of, these are some old names. I'm just, been around a while, E.F. Hutton, Dean Witter, Merrill Lynch. When were these firms founded? It was around 1910, 1912, 1914, and a little bit later in some cases. But the Liberty bond was the beginning of the retail investing market in the United States. Prior to World War I, U.S. wars were always financed by big shots. Stephen Girard financed the War of 1812. Nicholas Biddle financed the Revolutionary War. James Cook financed the Civil War. There these dealers who did it, but that all changed around World War I. So my point being, there's an example, contrary to everything I just said about China building a top-down bond market, and I don't think they can do it. Here's an example of a bottom-up bond market, where you basically got retail investors to buy into these bonds. And if you get enough of them, you're going to have a bond market because somebody will start making a market in it. And let's say you go to a typical Brazilian and you say, hey, you got 2 choices. You can buy a Raiz denominated bond, or you can buy a Brics denominated bond. What do you want?
What do you think? Yeah.
And then multiply that by the world. So that's not going to happen overnight by any means, but I think there is the potential for an indigenous bottom-up retail bond market in the Brics currency for the reasons I mentioned, that over time, sooner than later, perhaps could give you something like a reserve currency status. So this thing is so well thought out, and they've even things that I would have objected to is recently submarine cable. They call it Brics cable, because the U.S. is very good at tapping these things. I actually did a job once where I had to figure out all the global telecommunications in the world through cable. It was a long story, but there's something called CWME, which is C is Southeast Asia, We is Western Europe, and me is Middle East. So see, we me is basically the cable system that connects Asia and London. And then there's a separate one that goes from London to States. I know where it goes. I can't say, but it has a nice home in the United States. And I know where the Middle East choke points are. And again, I won't say those, but the point is, if you cut that cable at one of those choke points, or you go off in somewhere in the Mediterranean and cut that cable, you shut down internet communications between Europe and Asia, like in a heartbeat, and by extension, the United States. More sophisticated version is to tap them. Easier said than done. Every now and then the internet will go out and go, oh, yeah, there's some problem with the internet. It's like, well, no, you're tapping the cable, and it'll be back up in a couple of hours. So the Brics know this, and they are laying their own cables. Now, easier said than done in terms of protecting them, but they want to have encrypted, secure communications and payment channels. Again, they've been screwed over by the West. We kicked them out of SWIFT. We kicked them out of, other interbank payment systems. They ended Visa. Visa is no good in Russia. MasterCard is no good in Russia. The banks can't transact in dollars, certainly. Okay. This is the 12th largest economy in the world. It's the largest landmass in the world. It's the largest nuclear arsenal in the world, et cetera. But you're saying you can't be part of the international payment system. Well, there's a simple solution to that. Way the ruble's not going to. Who cares? I go to Mexico. I got to get some pesos. Actually, use dollars in Mexico. But you take the point. In Philadelphia, we call this walking around money. That the Brics currency is not going to be walking around money. We're not going to have paper versions. We're not going to have it in our pockets. I mean, I don't know, 10 years, who knows? But not now. In terms of what's going to happen on August 20th, or many summits all over the world, this is the Leader Summit. So Ramaphosa of South Africa, Lula da Silva, Brazil, Prime Minister Modi of India, and Xi Jinping of China are going to be there. Now, Putin was supposed to be there, but here it gets complicated. There's an outstanding warrant for Putin's arrest issued by the International Criminal Court on, so-called war crimes. I think we could issue a few of those, but it's kind of under the thumb of the U.S. South Africa is a member of the International Criminal Court. There's a treaty and they signed it. So everyone's like, well, arrest Putin when he gets off the plane. And President Ramaphosa said, no, we're not going to do that. And he called the Kremlin and said, rest assured, we're not going to arrest you. But the opposition party in South Africa filed a petition with the Supreme Court to get an arrest warrant. Plus, you have to worry about NGOs and third parties and, other people who might take it upon themselves. So Putin, I think very wisely said, this is a distraction. We don't need this right now. So he's going to stay in Moscow and he'll participate by Zoom. And a lot of people go, well, there goes the Brics Summit. I think the opposite is true. This is going to, first of all, infuriate the rest of them, and it's going to make them more determined, because this is an example of Western hegemony. This is an example of hegemonic bullying. Again, I don't need to take sides on the politics. I'm just telling you what's going on. And so the fact that Putin's got to sit in the Kremlin and Zoom in is another example of Western bullying, for want of a better word. But they're going to go ahead with it. Number one, and Sergei Lavrov, who's the foreign minister, will be in Johannesburg. I think he's the brains behind this. And I'm not, here's what I'm not saying. I'm not saying we're all going to go to bed on the 22nd of August and we're going to wake up on the 23rd and there's a new currency and the dollar's down. No, that's not happening. They're going to announce it. It will be introduced in stages. It will take a while to, but the big thing is the thing I mentioned, which is the definition will be by weight of gold. Now, by the way, I don't take too much time on this. This process is an exact duplication of the process that John Maynard Keynes went through at Bretton Woods. And he was ultimately unsuccessful. He was overruled by the United States and Harry Dexter White, who was the U.S. delegate, who turned out to be a Stalinist agent. We found that out later. But what Keynes wanted, and I'm sure you know this, he wanted world money. He wanted the Bancor. He didn't like the idea. He wasn't against gold, not at all. But he was against the idea that somehow only the dollar would be tied to gold and everybody else would be tied to the dollar. That meant you had to go to the U.S. and via the IMF and say, Mother, may I, devalue or whatever, because the U.S. was in charge. Keynes said, let's have one currency unit, a world money. He called it the Bancor. And the other thing he did when he started, and I've read all his papers, he started his research with a commodity basket. I said, well, all right, so what's the Bancor worth? Same problem the Brics are facing. What's the Bancor worth? He said, well, you could have so many barrels of oil, so many bushels of wheat, so many tons of copper, et cetera, through this commodity basket. And he very quickly discovered that commodities are not quite as generic or homogeneous as people believe. They're oil, yeah, but there's 72 grades of oil around the world based on sulfur content, viscosity, transportation costs. They're not all the same. So through a process of elimination, he just said, well, why don't we just use gold? And gold's easy. It's not that it's pretty and shiny, but it's an element. It's not even a molecule. It's an atomic number 79. It's either gold or it's an intermediate buyer, which is the US banking system. In the 1950s, a typical large US bank balance sheet was 40% treasuries. That was normal. That wasn't like hoarding. Today, it's about 5 to 7%. So I think you'll get a phone call to Jamie Dimon and I forget all the other CEOs, Jane Meyer, the lady at Citi. They'll call them first to say, people got to buy bonds. And of course, they're all under the thumb of the US government, and they will. So you might have a pretty good cushion of bond buyers. Why hasn't the People's Bank of China sold more dollars? Well, it's because they're making the banks do it. The commercial banks are selling the dollars and propping up the yuan. And we can see something similar in the United States. So that's one. I just kind of pencil in the commercial banking system, at least the big banks, as potential buyers of not quite last resort, as a way to put it. But the other thing, the Brics, what they've done, this is part of the brilliance, they've opted out of the exchange market. They're like, because normally if the dollar is getting weaker, you're getting stronger. That's bad for exports. It's bad for export related jobs, et cetera. And it's currency wars. That was my first book, Currency Wars. But by defining their currency by weight of gold, not dollar amount, but by weight of gold, they're out. But I gave a presentation to a big audience the other day, and it was an end of thing panel, and they said, what are we missing, or what's going to happen? I say, here's the thing. What have we learned? I said, well, we haven't learned about uncertainty because we already know about uncertainty. We all understand that we're living in an uncertain world and we have to make allowance for that. So we didn't learn that. We already knew that. I said, well, what is new is the tempo of shocks is accelerating. There are shocks, go back to the panic of 1837 or 1857 or 1898. You know all of them. I've lived through enough of them. I'm kind of a magnet for trouble. But there's no end to financial panics. But what's different about this is that we may be looking at a tempo that's a lot faster. It's not every 7 years or every 10 years anymore. Between the U.S. is losing the war in Ukraine badly. You might even see Poland come in and bite off the western half of Ukraine, what former Ukraine, up to Lviv, and Russia take the bottom 1/3, including the entire coastline through Odessa, and leave a little rump state, landlocked rump state around Kiev, maybe. So and there's no way to cover this stuff up. The New York Times and the Washington Post, I read them the same way I read Pravda during the Cold War. It's all lies. College, very select group, about 12 people in the class, seminar style, mid-career, 40-ish, lieutenant colonels, Navy commanders, that level. But they've been handpicked as the future big brains. These are people who in 7 or 8 years are expected to be, 3-star generals, national security advisors, et cetera. And I do the financial warfare module. And I told them this. I said, well, when I taught the class in 2022, I said, the sanctions are going to fail. Russia's behavior will not be altered. Russia's military will not be diminished, and they will backfire on the United States. And they got a lot of pushback because everyone's gung ho, Ukraine. This year, when the class was there, I said, here's what I taught last year's class. And I was right about everything. Everything I said was right. So that got their attention. And there was one lady kind of quiet, but very nice lady. And she came up to me afterwards. Oh, because I made a big deal about sourcing. Because if you can't trust the New York Times, the Washington Post, or NBC, or any of that stuff, how do you find out what's going on? I mean, I'm not on the battlefield, I'm not even in London. And it was hard. I mean, I'm good at it, but that was hard. That took months to track down sources and websites and that you could rely on. It wasn't like the Russian Defense Ministry. And then, so this lady came up to me after the class and she said, Jim, could you give me this list, your list of sources? I said, of course, I'll email it to you, no problem. But then I thought to myself, wow, you're kind of